I'm Taylor Riggs. This is the best of Bloomberg Technology, where we bring you all of our top interviews from this week in tech. Coming up, Ipo Woes. WeWork was supposed to be embarking on its big roadshow this week, but complications delayed the IPO. How was the company regrouping? Plus, listening in. Is it really the right time for Facebook to tout a device that can listen to you in your own living room? We'll talk to Andrew Bosworth, the social network's VP of Augmented and Virtual Reality. And rapid climate adaptation. Billionaire Bill Gates wants to help invest nearly $2 trillion over the next decade to help the world become more resilient. His thoughts on and potential solutions for climate change. For WeWork, it was the roadshow that wasn't this week. One of the most highly anticipated public debuts of the year, it is now postponed until October. The shared office space provider is looking for more time to calm investor doubts about its dropping valuation, governance problems, and financials. Remember that at one point, this was supposed to be a $47 billion company. That number is now $15 billion and could be perhaps even smaller. Joining me to discuss this all was Phil Haslett, the co-founder and chief revenue officer at EquityZen. EquityZen is a secondary marketplace for pre-IPO shares, and Bloomberg's Crystal C.
They have a lot of things to address before they can go out to the investors again and ask them for their money. Like you said, they were looking for a $47 billion valuation, and now we're hearing it could be as low as 12 to 15. And they have actually made a lot of changes to corporate governance, but investors are really looking at valuations, whether they will improve their performance, financials, and whether more changes are needed to the corporate governance structure in order for them to be convinced about the valuation that they want to get.
Phil, this morning on The Open, they spoke with Gene Munster, who co-founded Loop Ventures. He had some comments, particularly as it related to the valuation part of WeWork. Take a listen.
That valuation, I think, is really a wake-up call to private investors that the public markets are holding them accountable. And the specific reason I think this report reflected that is the amount of cash burn. What is a consistent theme in your setup here address this is that companies that are losing a lot of money, not surprising, are being held to lower valuations. In the case of WeWork, it's $1.5 billion over the last year, which is more than what Tesla lost. To put that in perspective.
Phil, react to those comments on valuation.
Totally. So, I would say WeWork is kind of in a space of its own, having lost $2 billion in 2018. I think in a mix of Lyft, Uber, and WeWork planning to come public in 2019, I think we've seen really like the largest losing companies coming out of kind of the pre-IPO tech space. At EquityZen, amongst these types of groups of companies, we also see plenty of companies that are burning only $100 million or $200 million in cash. I think WeWork is certainly an exception to the norm, but gosh, writing off $37 billion of value over the period of 3 or 4 weeks is certainly going to catch the attention of a lot of venture capital investors and also public market investors.
Phil, we can joke on Twitter all day long about how you value a company using the discounted cash flow model for a company that does not have cash flows. But on a very serious note, how do you value this company?
Sure. So with WeWork, the first thing we looked at was trying to look at a multiple of revenue and some of the competitors that are publicly traded. And the first thing that we found at EquityZen, through our research, was that some of their competitors like IWG were trading at, I think, 1 or 1.5 times their revenue. WeWork earned, I think, about $2 billion in revenue in 2018. So to come out at a $47 billion valuation seemed ludicrous on its own front. I think the toughest thing for WeWork is trying to explain and defend itself as a technology company, where in reality, it really is a real estate company that happens to have some technology bells and whistles. And so I think this really is a big wake-up call for them to maybe recalibrate those expectations, maybe in Q4 or even a little bit later in 2020.
Phil, talk to me more about that valuation. What did the private market see that the public markets are missing?
Sure. So one of the interesting things we saw at EquityZen, where we see a lot of kind of pre-IPO secondary flow before companies go public, is that there actually wasn't that much interest for WeWork, particularly at the valuations that it had attained from SoftBank and from other investors in primary capital raises. We saw much healthier markets for companies that went public recently in 2018 and 19, companies like DocuSign, companies like Slack that were a little bit more popular with investors. And we kind of would have expected to see something similar for a company like WeWork because the brand is so ubiquitous. However, there was a little bit of hesitation from some of those investors at that lofty valuation. When you get north of $20 billion in valuation, you're not talking about hundreds of unicorns there anymore. The number of decacorns or whatever unit you want to call really drops precipitously. And particularly when you have that kind of valuation coupled with losses of north of $2 billion, I think was just kind of a recipe for disaster here. And one thing I think about is that we've been in very much a bull market, not only in public stocks, but also in private companies. And that has led to founder-friendly terms on how they've raised capital. And at some point, you are going to have the pendulum swing. And I think when you have this type of headline cut in valuation will really start to shift those types of numbers over to investors that are going to start to ask for more corporate governance, more reasonable valuations, and other parts within the cap structure that they'll get more comfortable with.
Crystal, when we were talking about bondholders, you mentioned that a $6 billion financing was contingent upon raising $3 billion in that IPO. Assuming that doesn't happen, when does WeWork need to get more cash and where do they get it?
I think the very simple answer to that question is they always need to get more cash as soon as possible. If the IPO doesn't happen by the end of the year, they may look into tapping to SoftBank to get a bit more funding. And there were actually some talks about SoftBank being willing to put in another couple $100 million into the company, but that would not move the needle. They would definitely want to do an IPO to, recapitalize.
Phil, quickly here, any ideas on when is their drop-dead deadline for raising more cash?
Gosh, I got to think that they might want to push this over to 2020, but with only about $3 or $3.5 billion of cash available to them, things could get really messy here starting in Q1 of 2020, particularly if a lot of the lenders that have promised to provide them capital if they raise their IPO before 2019, they're going to kind of put them in this tight bind. If I were them, I'd spend the next quarter really tightening the belt and trying to overhaul spending, show some great numbers at the end of Q4, try to renegotiate with some of the banks and try to list in Q1.
That was Phil Haslett, co-founder and chief revenue officer at EquityZen and Bloomberg's Crystal C. Apple told a European Union court this week it was unfairly painted as a tax dodger. In Luxembourg, an Apple lawyer said that, in fact, the company is the world's top taxpayer. Apple is urging the EU General Court to overturn an order from the European Commission that it pay a record $14 billion in back taxes to Ireland. Bloomberg's Maria Tadeo filed this report from Luxembourg.
Apple is coming face-to-face with European regulators on the biggest tax case in the world. Right now, the company has appealed a 13 billion euro fine that was dictated by the European Commission in 2016. And now the idea behind this, according to the Europeans, is that Apple received special tax treatment from the Irish government, which allowed the company to pay artificially low taxes. Apple says this was not the case and has appealed that decision. And if you were hoping to get a sorry moment from the company, that was certainly not the case here. Apple said it is the company that pays the most tax in the world. They actually claimed the decision from the Europeans lacked any logic or sense, and they also believe the numbers here were tweaked in a way that presented Apple in a bad light in front of the public opinion. Essentially, the goal was to portray the company as paying almost no taxes. When you look at the European side to the story, they'll tell you they still believe they're right. They still believe it's pretty obvious by now that Apple has set out a tax structure in Europe to pay the least amount possible. And they do believe that if the arguments are validated and they're vindicated by the court, they can continue to get tough on American tech companies to make them pay more in Europe. Of course, this tax case is happening as tensions continue to play out between the United States of America and Europe over big American tech. The president of the United States of America, Donald Trump, has said many times this is only happening because the Europeans simply cannot compete on the innovation, so they compete on the taxation. When it comes to the EU, they deny this is the case. They just want everyone to pay their fair share.
That was Maria Tadeo from Luxembourg. Coming up, part of our exclusive interview with IBM CEO Ginny Rometty, why she thinks blockchain, it's all about trust. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. IBM announced Wednesday would open the first quantum computation center in an effort to expand its fleet of quantum computers and further realize the business potential of the next generation technology. The real-world application of quantum, and for that matter, blockchain, it's something that Bloomberg's Caroline Hyde covered when she sat down with IBM CEO Ginny Rometty in this exclusive interview.
When I look at the future of technologies coming, now we are all about applying them to business, but we build some of the world's leading technologies in together here. And yes, cloud and AI, everyone talks about that today, artificial intelligence and cloud, and much more to still be done there, by the way. But we'll park those for a minute. The next two, blockchain and quantum. Now, as often is the case with new technologies, people overestimate them in the beginning and then underestimate them in the long term, as it's said. But blockchain, if you said, Ginny, what's one word you would associate with blockchain? I would say trust. Put crypto, that's a use. Put that aside, and it even has to use the right kind of blockchain, which is not always the case today. What blockchain, my simple thing, what blockchain should do, it will put trust between parties who don't even know each other. So it would make trusted transactions, and it would do what the internet did for communications between lots of parties. And so a great example, if I can, on trust and blockchain, because what it allows you to do is you and I can share a transaction together. I don't have to see anything you don't want me to see. And once a transaction's completed, it cannot be erased. So think of a ledger, right?
Yeah.
Because why do we each keep our own checking accounts? And do we trust what the bank says? Well, today we probably do. In the old days, we would each balance our checkbooks and the like. And if I said to you, hey, you have $100, you're like, let me check my own notes here, right? So it's the same idea of a blockchain. It's what it's doing. And so a big application right now is food safety. Okay, 1 out of 10 people get sick. 600 million people, more in the world, get some form of illness from food safety. That's a pretty big problem and costs a lot of money. You've seen it when there have been recalls on spinach and the like. We started something called, it's called Food Trust. And think about this on Walmart, Carrefour. These are competitors out in the world, all being willing to join on. Nestle, Unilever, Driscoll, Strawberries, and the like. And what they're doing is they're saying, no, we will all put our data on here about, what row in the farm this came from. Mm-hmm. So from farm to fork. So when there is an issue, and my goodness, we've done millions and millions of transactions already through this, I can pinpoint where the bad spinach is versus call it all back, because a third of the food's wasted in this world. Can you believe this? And so that's, to me, that's one. And quantum, if you want me, I'd jump over to quantum. So just as I said blockchain, think about the word trust. Quantum will solve problems that today the traditional computers, no matter how fast they are, cannot solve. And it's because traditional computers, 0 and a 1. We all learned that about a bit in a computer.
Yeah.
Quantum bits have infinite states. So they're for the kinds of problems that today, even if you had the best supercomputer, you really could never model. It would run forever. I'm exaggerating a little bit to show you that. In that, so let's take. It's the reason there's wet labs in biology as an example, because it's an approximation. Why do they still do live? They can't get an exact simulation done. So what quantum will do is things like the very first things will be drug discovery, material sciences, risk management, logistics. These are incredibly different. If you were to want to truly model a molecule of caffeine, you would need a computer a tenth the size of this planet if you actually wanted the actual simulation. So now, we've already with our quantum systems, we have made commercial ones available through a cloud because they operate at colder than outer space, and this is what quantum is. Things like you've got Daimler working on new materials like batteries in cars. JP Morgan is working on things like how to price different kinds of options, how to look at risk differently, and drug discovery. So we've got a huge network of clients because now's the time to start to get used to it. Well, now you say the word trust. I would add only one other side to quantum. There is a dark side. One dark side of it is quantum can break some of traditional encryption that has protected most of the world. In fact, we announced some new systems last night that they are to prepare for quantum already. So already our security in them to secure what's inside our systems that run all those mission critical systems are quantum safe. And so we've been equally building something called lattice cryptography, which is a kind of encryption that quantum cannot break. And this to me goes back to responsible stewardship. If I'm going to build a tool that's that powerful, I owe it to society to be sure if it's got a downside, that I also address the downside. So we put as much effort into that, into then creating something that prevents that thing from being that powerful. So both sides.
That was part of Bloomberg's exclusive interview with IBM CEO Ginny Rometty. And coming up, listening in, Facebook confirms it will resume collecting and transcribing some user audio clips from its in-home video device portal. We'll hear from Facebook's Vice President for Augmented and Virtual Reality, Andrew Bosworth. And later, corporate ventures data analytics company Splunk officially enters the VC world. We'll get details with Splunk CEO Doug Merritt. This is Bloomberg. Facebook confirmed this week it will resume collecting and transcribing some user audio clips from its in-home video device portal. I spoke to Facebook's Vice President for Augmented and Virtual Reality, Andrew Bosworth, at the launch of a new generation of portal devices. Bosworth oversees hardware and devices at Facebook. Take a listen.
We're so excited about our new products. We've got a 10-inch and an 8-inch HD screen, and they're really oriented towards connecting people with the ones they love the most, who maybe aren't nearby through video calling. Now, these also are kind of designed to look like picture frames, so they can fit into anyone's home just as easily and naturally as if they were picture frames. They'll even show pictures when they're not in use.
And then another really cool thing that you guys are launching is the TV portal as well. So tell me about that.
Yeah, Portal TV takes advantage of what is already the biggest screen in most people's homes, the TV, and turns it into a really immersive video calling device.
So one thing that really struck out to me was the price point, which at about $149 feels like you're really trying to push into what is already a competitive space. You have Roku, Apple TV. How do you stand out?
Yeah, we think that the most important thing that people do is connect with each other. And until now, all these devices, they're not really focused on that. They're focused on connecting you with content, which is great, and they're very useful. But when it comes to connecting with the people you care the most about, that was something that was missing. And so with Portal, you can use Facebook, you can use Messenger, you can use WhatsApp to connect with the people that you care the most about in a really rich, immersive way, with cameras that follow you around the room and you're hands-free, and you and your kids can connect with your grandparents or your friends without having to worry about holding a phone and your arm getting tired and trying to fit everyone into the shot.
So you mentioned camera, so I have to bring up on the portal, of course, there was that button where you could turn the camera off. Privacy has been a huge concern. Was that the focal point of making sure it was very easy for me to turn the camera on and off?
Yeah, when you're introducing new devices for people's homes, people have never experienced anything like Portal before. And it's got a camera and it's got a microphone. We wanted to make sure everyone felt really comfortable and in control of that experience. So these generations of portals don't just have controls to turn off the camera and the microphone. They actually have integrated shutters that cover the camera so you can see that it's not seeing you.
What about the microphones?
The microphones have an active light when they're disabled so that you know they're disabled, and then alternatively you can decide to leave the microphone on if you want to use the assistants like Alexa or Hey Portal.
And so during that, if I say Hey Portal, am I still being recorded?
If the device hears the wake word, like Hey Portal, it sends a short recording or a voice clip up to the servers to kind of get an answer back to you. And if you have storage enabled, which is the default, then we may review those voice recordings to kind of improve the quality over time. But you can also disable those on the device itself or on your Facebook activity log.
Privacy, data, all of that has been a big focal point of Facebook. Is now the right time to be launching new products where there is a camera, where there is a microphone, when right now there's so much scrutiny and arguably the least amount of trust in Facebook?
Yeah, I think now is the best time to be launching a product like this. Connecting with somebody else that you care about is the essence of what Facebook does, and that's what the Portal devices are centered around, is video calling with the people that you care the most about. Now, we've taken every precaution that we can to make sure people feel comfortable with the devices in their homes and the controls they have on those devices, but I think when they have that experience of connecting with somebody that they care about who doesn't live nearby, they're going to really experience something that's special for them.
It also comes at a time when antitrust scrutiny is at the highest, looking at big tech. When you think of Facebook, a lot of people think the app and more of a software. Is now also the right time to be expanding your tentacles and showing regulators how big you are and going into tech, going into your home, going into a TV?
The smart display category is so new. I mean, really, the entire devices of smart display have only been in the market for 2 or 3 years now. And I think it's really early, and everyone wants to experiment and see what kind of value we can create there. It's not very big yet, but it's growing year over year. And so if people decide that they're excited about video calling for the home, and we think they will be, then I think Portal is going to be a great fit for them.
Joining me now to discuss this further, it's Bloomberg Technology reporter Kurt Wagner, who covers Facebook. First, I want to talk about the privacy issues that are going on, and frankly, that opt-out button. Right. It's not an opt-in. Does that go far enough to quell our concerns about privacy?
Well, I think the big issue that we've seen so far with these transcription happenings that have been a big issue with tech is that people just didn't know about it. People weren't aware that the audio they were giving these companies was being transcribed at all. And so I think at the very least, Facebook's at least acknowledging this. They're talking about it. They made the opt-out thing part of kind of their presentation with the press yesterday. So while it's not necessarily, they say, hey, privacy is very important, you would think they might make that the default if that's how they truly felt. At the same time, at least they're now acknowledging it in a way that just a few months ago, none of these companies were doing.
And what do you make of them launching in your living room cameras and microphones when trust in that company is really at an all-time low?
Yeah, I mean, you asked them this, I asked them this yesterday as well. It seems crazy, right? Like the timing for Facebook to be adding not only a device to your home, but one that has a camera and a microphone on it. It just does not feel like the right time. At the same time, when is going to be the right time for Facebook? I'm not sure if, a year ago it certainly wouldn't have been any better. Is a year from now going to be any better? So I kind of understand why they're pushing forward with this, because you don't really know when is going to be the, quote, right time for that. But certainly more than almost any other company, they've been dealing with this privacy issue, and there's a trust issue too. And so it's hard to get, into someone's living room when people don't trust you. When
we talk about timing, this is a very competitive space. You had Comcast make an announcement, Facebook, you have companies like Roku, Apple TV, I mean, name it. And this is very competitive. How does Facebook stand to differentiate themselves? Yeah, they were very clear about this yesterday. They said the differentiator is the video calls. We think that people are going to use Portal to, do what you might call a FaceTime call on your phone, but this would be through their hardware. And in some cases, maybe even your TV set. You would do a video call through your TV. And they think that that differentiates them from all the others. We asked, well, what about the idea of having Netflix or HBO, these other kind of entertainment apps on these devices? And they kind of said, listen, there's a ton of places you can already go to do that stuff. Our differentiator is the video camera. I think it would make sense if they had both, but that is what they're really leaning into. When would we see Facebook come out with a version of the Google Home or the Amazon Alexa, an actual device that you can talk to? Yeah, well, you can talk to this one. So you can say there's two ways. You can either talk through Alexa, as you mentioned, or you can say, hey, Portal, and that will kind of wake it up for some very basic commands or requests. Those are the things that actually they are collecting and starting to transcribe. But I think the bigger question is, when are they going to have their own assistant, right? The software that you might say, hey, Portal, and it would actually give you a bunch of different options versus just some basic commands. Right now, they don't have any plans, they said, to remove Alexa and to build their own thing. But clearly, with the Hey Portal software, they're getting started on that. Coming up, so what does the $17 billion data analytics company do to diversify? Well, if you're Splunk, you enter the VC world. That's next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. Welcome back to the Best of Bloomberg Technology. I'm Taylor Riggs. Data analytics company Splunk made a splash Wednesday as it entered the venture capital world. The company announced 2 investment funds totaling $150 million. The first, it's $100 million, and it's an innovation fund, while the other is $50 million, and it's a social impact fund. Splunk Venture CEO Doug Merritt touted the move.
It really is a classic corporate fund. It's a fund within Splunk. We are super passionate about data and the power that data can bring to solve so many of the world's problems. And those 2 funds are purposely constructed to help invest in companies that have more of a commercial purpose on using data to solve different issues around the world, from healthcare to consumer issues to privacy issues, leveraging the Splunk platform. But we're even open to investing outside of people that play in the Splunk ecosystem. And the other one is more of a social fund. The transformation from an industrial economy to more of a data and services-driven economy can be dislocating. And there's a lot of great organizations out there that are trying to help with everything from reskilling of populations all the way through to different beneficial programs in areas like human trafficking, or that wouldn't necessarily be commercial entities, but really do an amazing societal good using data again as a backbone.
You know, analysts are pretty bullish on the stock. The last I checked on my terminal was 37 buys, 7 holds, 1 sell. They're really bullish on the future growth opportunities. Where do you see that future growth?
So we have classically focused on the technical departments within organizations because they are fully digital already, which means that they've got overwhelming amounts of data at their disposal that they need to craft the signal versus the noise from, which is where President Obama's comments came from. The genius of that data is it can also be used for manufacturing optimization, supply chain optimization, but our core focus on those technical buyers is still so early in the journey. We look at that market as being less than 5% penetrated. So our bulk of our focus remains on cybersecurity, IT resiliency, developers, and then helping those buyers serve the rest of the organization by taking that same data and using it for other revenue generating or customer serving or cost savings activities.
It was really interesting on Wednesday in post-market, shares of Splunk rose as much as 2%. This was on news that Cisco had tried to make an acquisition for Datadog. Datadog, of course, then rebuffed the offer. But the point here is the broader M&A landscape. Do you assume Splunk makes further cloud acquisitions, or do you get bought out?
The thing we can control is who do we focus on. And I talked this morning that we've made over 10 acquisitions across 4 years. We are actively always looking at additional technologies that could add to our fold and help our customers. I would anticipate that there'd be more in the future. We had 2 relatively big ones over the past 3 weeks. And we see so much opportunity. We're at truly the beginning innings of this data era. So whatever it takes, organic or inorganic, to make sure that our customers' needs are solved and they can actually turn data into doing and not just be overwhelmed by it is something that we're committed to.
Within the cloud space, how do you compete with the big guys? Amazon, Oracle, et cetera, who not only have a cloud, but then they also have their own data analytics company. How do you stand out? Yeah,
that's right now we are adding value to the different data services that those vendors provide. We're enhancing and enriching the services that they offer. The reality that any of us live in when you are participating with Google, with Microsoft, with Amazon, is you've got to always find ways to add value up that stack. So that's going back to acquisitions and the massive investments we constantly make in R&D. They keep coming out with really compelling services. We keep finding ways to add much more effective value to those services, but then also draw from the multi-cloud horizon and on-prem data centers to then take that value up even higher for organizations that have these very heterogeneous landscapes.
As we dig down into your business a little, I should note JP Morgan analyst upgraded the stock again today on he sees advanced bookings or future bookings really strong going out into the year. How do you forecast future bookings? How do they look?
The economy is in such an interesting state right now. What we have seen in the last 2 quarters is while people are Well, there's a lot of change, and they're trying to digest the change. The data initiative and this digital transformation we've been talking about for a decade remains top of mind for leaders. When you're facing the born in the cloud vendors that bring new business models to their customers, you must keep investing in the digital transformation journey and in taking advantage of data. So far, we're not seeing any big impacts in our outlook for our products, and it's always a quarter-by-quarter outlook on that.
Yeah, how is the broader tech spending environment? Do you at all fluctuate with tariffs, with trade, internationally versus domestic? How has that consumer spend felt?
We're probably a secondary impact. As organizations have to bear the burden of tariffs, that obviously takes budget. Then they have to reevaluate budgets and what they want to spend that money on. We do trade internationally. We do sell internationally, and currency is an issue for us there. We tend to be in U.S. dollars. That still has an effect on us because now they've got to quantify what the new price is based on their own currency fluctuations. So it's probably not quite the same impact that a manufacturer or something that's shipping physical goods has. But ultimately, we're at the service of our customers and trying to drive them forward, and their budgets translate back into what they can spend with on firms like us.
Finally, you introduced some recent price changes. How much more of a tailwind is that for you going forward?
The main focus that we were really driving is serving our customers. Customer success is our number one business criteria. So this was a key element that we felt was critical for customers to get value from Splunk. Now, within our modeling, we think it's a tailwind. We think it provides a lot more leniency for what they can do with the software. And there's so much data that with a easier pricing metric, they're able to put a lot more data in and get a lot more value back out.
That was Doug Merritt, CEO of Splunk. Now, Splunk's rival Datadog also joined Bloomberg TV this week. The New York-based enterprise software company went public on Thursday. Bloomberg's Ed Hammond caught up with the CEO, Olivier Pommel, at the NASDAQ.
To get to that kind of growth, you have to solve a real problem for real customers, and that's what we do, right? The way we spend our days, we focus on figuring out how to make our customers' lives simpler, as they run their infrastructures, their applications, and serve their own customers.
And how do you actually grow in terms of market share? Because you have a lot of on-premise competitors. I can understand how you take share from them. It's a very crowded space nonetheless in cloud. How do you compete with the big companies, the Atlassians of the world, ServiceNows, to actually win share from them?
Yeah, so first of all, it's a very big market, and it's a market that's growing very fast. So there's room in the market for many companies to be successful. But really, the way we compete is, we're focused on cloud, and on companies that are moving from legacy IT to public and private cloud. We built from that from day one. We focus on getting to the maximum level of reach within those companies, as in being used by as many of their engineers as possible, and that's what makes us different.
But how do you do that? What is the point of differentiation for this company?
Well, we do that by making the data a lot more accessible across different teams, and that's why we started the company to start with. We started it to break down silos between teams that were separate, didn't actually see eye to eye and didn't look at the same kind of data. Our focus from day one was to bring all this data from various sources into one place and make it accessible to different teams. That's how we get deployed by more teams, get more users, and in the end compete with the other companies.
Now, obviously, everything in the public market at the moment is slightly overshadowed by what's been going on with WeWork and their travails as a fairly painful route to market. Having just done an IPO, and indeed a very successful IPO in terms of the day one pricing, what would your advice be to them looking to go public?
Look, I don't have much to say about WeWork. We actually use WeWork in a number of cities for offices, so it's a real business. The best to do is always to focus on your customers and focusing also on on having a business that is healthy, in terms of the metrics and its profitability, I guess. That's what we do, and we keep doing that, and I guess others should do that too.
And you have this dual class of stock, very common obviously among tech companies. It's been a subject where there has been some controversy recently in terms of should companies have so much control, or should founders indeed have so much control over companies going public. Was there any discussion around potentially pulling back on that?
Well, for us, what matters, what's important is we're building for the long term, and we want that to remain the case as a public company. That's why it was important for us to have, while at the same time we serve investors. We deliver returns to investors. We run a business that is predictable for investors, that is healthy. But at the same time, we wanted to make sure we could execute on a long-term roadmap, which is why we had this dual class of stock.
And another story, obviously, that's been much in the news, at least overnight, is interest from Cisco. Talk to us about that. Indeed, why does it make sense for a company like Datadog to be public and independent versus under the auspices of a bigger organization like Cisco?
So I can't really comment on any of the rumors that we've heard, but what I can tell you is that it's a very big market we're in. We see there's many more problems we can solve for our customers, and there's a much bigger and much more successful company we can build from where we are today. So that from that perspective, it makes sense to be an independent public company.
And do you see M&A down the road, either potentially as an acquirer yourselves or as a seller to one of the larger players?
So we've done acquisitions in the past, and they've been very successful. In fact, the founders of the company we acquired are all in the room today, and we might and will certainly do more in the future.
That was Datadog CEO Olivier Pommel with Bloomberg's Ed Hammond. And coming up, an internet unit spinoff of South Africa's Naspers traded publicly for the first time in Europe this week. We'll check in on the performance of Prosus and its 10-cent stake with Naspers CEO next. And the world's second richest person on climate change will hear from Bill Gates. His thoughts on the kinds of adaptive action we can take now to protect the planet. This is Bloomberg. Just last week, investors piled into the newly listed internet unit from South Africa's Naspers. Shares of Prosus initially jumped as much as 32% above its reference point before declining. Prosus holds assets that include a lucrative stake in China's Tencent holdings. I caught up with Naspers CEO Bob Van Dijk and asked what he sees in Prosus that investors should be open to.
The start was quite positive, and I think what we expected it to be somewhat volatile in the beginning, right? It's a new listing, and actually the shareholders haven't yet received their shares. They will only get them effectively on Monday. In fact, to be more activity going forward. And generally, I think people are very excited to have a large consumer internet group listed in Europe, and we're actually the largest consumer internet group listed in Europe. Investors are very positive about it.
Is now the right time to be IPOing?
The core business has turned profitable in classifieds and payments, and we're also growing very fast organically. So I think the timing is actually perfect.
You mentioned classifieds. What's the next business you would direct list or IPO?
We're really focused on Prosus at the moment, and the important thing for us is we are a growth company, and we want to see this next wave of growth happen, and we want to get the right investor base into the new Prosus listing, and that's the first priority.
What sectors are you investing in next?
There's so much out there that we're excited about. We're investing in food delivery, and that's, I think, in the US also a very rapidly growing sector, but we see it basically everywhere in the world. People are really using more and more meal occasions to order in at work or at home, so we think that's basically a 20x growth opportunity from here. Very excited about it.
So talk to me more about food delivery, because the competition is heating up in that space. You have more companies coming out that are trying to invest in that market. How do you stand out? How do you differentiate yourself?
So what we see is that it's really important to have excellent local operations, and I think what we've seen in markets like India, what it requires to be successful there is different than what it requires in another market. So you need an excellent operator on the ground who really understands his customers, understands what restaurants need, and just has a very efficient and scalable operation. When
you talk about being in the local market, you mentioned India. Talk to me about being in the local market in China. How does that work?
So in China, we are an investor in Tencent. We have about 31% of the shares, and as a market, it's probably the most attractive internet market in the world, the biggest internet market in users, obviously, and growing very fast still. And I think Tencent has a fantastic position in that market, and probably the best leadership team. And we're very happy to be active in the market through Tencent.
You talk a lot about food delivery. I know you're also a big investor in AI is all the rage these days, cloud products, software. Outside food delivery, where do you see sort of the next frontier?
So I would definitely say if you look at technology that is really going to make a massive difference in our lives, I would say machine learning is probably the one that stands out. And I think it's going to be as transformational, or maybe even more so than mobile phones have been over time, because it's really changing how people interact with the internet. And I think it's actually going to be relevant in all the businesses that we have. So machine learning is a huge topic of interest for us.
A big thing in the market recently has been finding that path to profitability. As you look at companies and individual markets that you do or don't like, or looking at different sectors that you want to be involved in, how important is it to be able to see that roadmap to a path to profitability?
No, it's an excellent question. And the way we think about it is that if you understand the business model well, you're comfortable that you really grasp the details of it, we're fine investing and having losses for a number of years. So we did that in classifieds, and now it turned profitable. So as long as you know the model well that you're investing in, you'll be comfortable with a number of years of losses, but in the end, obviously, it needs to make money.
We've talked a lot about India and China. What we have not talked about is the U.S. Why do you continue to focus on investments in emerging markets, and would you ever consider big investments in the U.S.?
Yeah, it's actually a good thing that we speak about that, because we are a growth company, but not necessarily just a growth market company. We've actually invested quite a bit in the U.S. in the last few years in a company called LetGo, which is basically trying to let people sell things they don't need anymore on a mobile phone.
So tell me more about that.
It's actually founded by a founder that's close to our hearts. His name is Alec Oxenford. He also founded our core classifieds business OLX, and now he founded this company. And I think what it does really well is make something that you don't need anymore, make it as easy to sell it as throwing it away. So it makes it super simple.
I finally just want to end on a broader question here about being in the midst of the U.S.-China trade war. You know, you've been focused on China. Has the tariffs or the trade war impacted any of the relationships between the U.S. and China?
So if you look at the investment we have in China, in Tencent, I think Tencent is mainly operating domestically. It's a very strong Chinese franchise, and has game franchise in different markets. And I would say the operations of the business have not been so much impacted, but I think it obviously has impacted investor sentiment. And I think that has had an impact on their share price and ours as well.
Are you purposely focusing on companies that are locally operated with China, that don't have that international exposure, that are subject to the trade headlines between the U.S.?
So one of the things that we do is we take a long-term perspective on the world, and I think it served us well over time. So when we do an investment, we typically take a 10-year horizon. So we wouldn't really worry about what happens today and in the here and now, but really look ahead.
That was Naspers CEO Bob Van Dijk. And coming up, clearing the fog on climate change. We'll talk sustainable investing and hear how the world's second richest man is helping those hit hardest. That's Bill Gates. He's next. This is Bloomberg. The United Nations Climate Action Summit is due to be held next week, and most Americans agree climate change is something that needs to be addressed. Bloomberg is part of the Covering Climate Now project, which includes more than 100 news outlets. CBS News, part of the project, recently conducted a poll which found 56% of Americans think we should be addressing climate change right now. Bill Gates has invested billions in clean energy to tackle climate change, but his latest strategy is not to try and prevent it. Gates wants to help those hit hardest by climate change, and that's geared towards adaptation. The world's second richest man recently spoke to Bloomberg's Eric Schatzker in Seattle.
If you can't afford air conditioning, if when your crop fails, you don't have a savings account to get past that, 1 year and 8, and so your children aren't having enough to eat. If you live near the equator where the absolute temperature is far higher than it is in the temperate zones, climate change is caused by middle income and rich people, but the people who suffer by far the most will be the poor. So it's very unjust. Even eventually, for the wealthy people, the problems will be very, very bad. But for the next 30, 40 years, most of it will hurt the subsistence farmer.
Why focus your efforts at the foundation on mitigation an adaptation to climate change instead of combating the root problem, carbon emissions?
Well, mitigation is not an area that the foundation gets involved in. That's where you're trying to switch to green energy or electric cars or meat that is made without cows. That's big private sector stuff.
And you invest in that?
I invest, billions in those things, including, nuclear reactors and all sorts of things to help there. Adaptation, which is taking the fact that there will be climate problems, and we need to help those who are hurt by it by giving them better seeds that can deal with the drought or that are more productive so you can save more money. Those things the foundation is very, very involved in. And most people think about this mitigation of reducing emissions, the idea of how you minimize the damage, which they call adaptation, that gets very little attention. And that's why I and a few others, Ban Ki-moon and a really great group of people, created a commission about this adaptation issue that later this year, that it'll make it more clear that there's work to be done there.
Do you think climate change is stoppable or maybe even reversible at some point?
Well, we're not going to have a year where the world is cooler than it is today. The temperature, the average global temperature is going to go up a lot. And in the next 50 years, it won't go down. Now, deciding how much it goes up, does it go up by 2 degrees or 3 degrees or 4 degrees, that's in our hands. If we ignore the problem, you're going to aim head to something that's like a 4-degree scenario, which in terms of natural ecosystems, forest fires, days that humans just can't go outside if you live near the equator, it's pretty extreme case. Knowing how seriously people are going to take it and what type of innovations will come along will determine where in that 2 to 4 degree range we are by the end of the century. And I certainly hope we don't run the experiment of being higher than 2 degrees, but it will take a lot of commitment and a bit of luck on the innovative breakthroughs to be able to get there.
There are a number of different ways of fighting climate change. Renewable energy is clearly one of them. Do you think governments should subsidize renewable energy or should take-up be dictated by market forces alone?
Well, the cost of wind and solar has come down dramatically, and some of that subsidization has helped drive that volume, which drives the learning curve, and the prices come down. Now they're they're not going to come down much more, so the tax benefits there should be shifted into things that are more limiting, like energy storage, offshore wind, which still has a huge premium price, lots of places that we need the market to get going. The progress in solar and wind is very helpful, but the sun doesn't shine 24 hours a day. If you're far away from the equator, actually in the winter, you can't get as much. And so, and that's just for the electricity piece, that's only 25% of emissions. So we need a lot of efforts. But yes, that subsidization, that accelerated rollout, that's one of the few advances we had. It's less than 10% of all energy generation, because the global economy has a lot of energy generation. But it's one of the good things that has been developed.
And that does it for this edition of the Best of Bloomberg Technology. We bring you all the latest in tech throughout the week. Tune in each day at 5 p.m. New York, 2 p.m. in San Francisco. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.